Before we start, this is not financial advice. The European Union just said the quiet part out loud. Resource security is national security. Within 30 days, the EU plans to sign a critical minerals pact with the United States and Japan. The goal? Lock in supply chain security. They're backing mining projects. They're backing refining projects. They're backing recycling projects to diversify away from China. Why the urgency? Because China isn't just in the game, it runs the scoreboard. Roughly 60% of global production for critical raw materials. Around 90% of refining. For Europe, it's even starker, about 90% dependency on Beijing for raw materials. 98% for rare earth magnets. Magnesium, 97% imported from China. Gallium, 71%. Germanium, 45%. Graphite, 40%. Tungsten, 31%. And China still uses export licenses for key rare earths, which means shipments can be slow-rolled. European firms are pushed to hand over sensitive supply chain data just to secure those licenses. Meanwhile, the EU's trade deficit with China is on track for a record by 2026. Inflection point. Washington just hosted a critical minerals ministerial with 50-plus countries. There are even floating price floors, minimum prices on imports, and that framework could extend to the EU and Japan. Markets blinked. Miners sold off on the headline. But here's the bigger picture. The world is shifting from globalization to strategic supply chains, from the cheapest supplier to the safest supplier. Europe's own auditors say 2030 targets are likely out of reach without major changes, permitting bottlenecks, financing gaps, local pushback. Timelines are long. This isn't just about climate anymore. It's about defense, digital sovereignty, wind turbines, EVs, fighter jets, semiconductors, all run on critical minerals. When governments talk joint investments and strategic stockpiles, that's structural demand. Critical minerals become strategic assets, and strategic assets eventually get repriced. Prepare, position, preserve.